Welcome, Mike. Lovely to see you again.
Thanks for having me.
I think that it's very interesting at the moment what's happening in the token market.
It always is.
What's happening at CoinList? What are you guys doing at CoinList?
Yeah, we've had a lot of recent big announcements that have come out on the CoinList side.
Okay.
I kept telling people all summer that things are very busy at CoinList, but a lot of those things weren't necessarily public facing at the time. But
Okay.
more recently, we conducted 2 token sales, the largest one being Nervos, which raised $70 million on the platform. And then we just launched Cadena this morning. So those are 2 token sales we're really excited about. In addition to that, last week we launched our own crypto exchange where we'll be able to trade crypto assets on CoinList. So the vision has always been the primary issuance takes place on the platform. Tokens are distributed directly into your CoinList wallet, and then you have a liquid exchange available for people to participate in. So we're super pumped to get that out the door.
Yeah.
It's been a long time coming, and it took a lot of work to get there.
Yeah, I bet. And so what is the state of play at the moment as far as tokens go? And obviously you guys have got a good overview of the work that you do.
Yeah. The state of play, from a regulatory perspective is, there continues to be a lot of uncertainty, unfortunately. And I think, if anything, there's probably uncertainty on the negative side. So, given recent announcements around Telegram, tokens that were sold through SaaS, I think there's uncertainty. Well, was that a legitimate way to do it? That just being one example. So what we're seeing is more teams saying, you know what I'll do? I'll block U.S. investors from a sale. I'll set up a foundation offshore, and I'll just avoid the United States altogether until at some point in time, ideally there's more certainty in the market. So from a regulatory perspective, I think teams are just saying, hey, they're throwing up their hands and they don't want to deal with any frustrating problems that might come about due to the SEC. So they're just avoiding the states altogether.
And how does that affect CoinList? Do you do that sort of?
Yeah, I think, companies or projects have known us, or the industry has known us as a place to do accredited investor sales. But our last couple of sales have actually not included U.S. participants. So Nervos, which raised a little over $70 million, did not include U.S. participants. Algorand, which we ran their sale earlier this summer, raised $60 million, also blocked the United States. So we are seeing a trend where teams are, whether or not they're based here or Nervos' case based in China, deciding to block the United States, and we've been very successful in raising those rounds. So fortunately, we've developed a global audience. We've had participants in sales from over 180 countries, and it's worked not just in the US but also outside.
That's fabulous. And what's your personal vision of where we're heading as regards tokens? Do you think that the SEC will get out of the way after a while and things will settle down a bit here in the US?
I do think that at some point of time, but I'm not holding my breath.
Right.
Even with relatively straightforward processes such as acquiring a broker-dealer, or you're seeing a lot of team or projects trying to get an ATS, an alternative trading system. It's taking much longer than it would have in a traditional financial services industry. So I do think that that regulatory certainty that everyone's kind of looking for is a bit further out. And what will get us there is, I think, more demonstrative examples of projects that ship something that actually delivers value within, from a technology perspective, where they kind of can't avoid, not supporting this technology. So I think we'll get there, but it might take a little bit longer than everyone's hoping for.
Yeah. Well, I guess it's sort of like laying groundwork really still at the moment in such a new area. So
yeah, and I think even that comes on the investment side as well, not just the regulatory side. So you saw a lot of capital come into the industry over the past 2017, 2018. A lot of layer 1 protocols that were developed, a number of them haven't shipped yet and are getting ready to ship in the early part of 2020. So a lot of investors are saying, hey, I've I put some investments out there. I want to see how those play out before
Yeah.
I not only decide to invest in layer 2 applications, but I decide, well, which blockchain is actually going to succeed and where should I double down?
Yeah. And it's sort of good to see that the froth has settled down too, because that was so crazy 2017, 2018. And I think a lot of people just were investing with no knowledge of both tokens or crypto market, and so there was a lot of people got burnt.
Yeah, I think one of the biggest detriments of that is just a misallocation of capital. So
Yes.
there are a lot of investable assets that exist out there, but because of all the noise at that time and everyone
Yeah.
thinking, hey, here's the next get rich opportunity,
Yes.
people were throwing money at things and not even thinking about what they're throwing money at. So
Exactly.
the bubble has popped. People are getting more realistic about what they should be investing in, or either taking a step back and being a little more conservative and picking and choosing, or being a little bit more deliberate in their approach.
Yeah, that's good. Well, thank you again, and I
Sure,
think
thank
this
you.
will be a great panel.
Yeah,
Thank you.
thank you.